All right, welcome back to the program. Chief Johnson Chukwu is joining me today. Of course, he's the GMD at Cowrie Assets Limited. Mr. Chukwu, Chief Chukwu, welcome to the program. We haven't spoken in a while.
Thank you, Chief Sister Nancy, for having me on your program. For the purpose of this program, I'm just a mister. In the village, I'm a chief.
Oh, what did you just say? I didn't get you.
I say, for the purpose of your program, just call me a mister. In the village, you can call me the chief.
I guess you should be a chief anywhere within the country. So far, you're within the territory, of Nigeria, because at least you're a chief. So welcome to the program. Where should we start from, Chief Chukwu? So much has been happening. We're looking at Nigeria's economy in Q2, but I think it's also proper to take a look to, do a backtrack to where we were in Q1. What do you think would be the biggest story of the Q1 of this year?
Well, I think the biggest story is that Naira saw the greatest gyration in its history in Q1. We saw Naira that opened at the parallel market at 1215 and then peaked at over 1,900 and has moderated again to about 1,278 or so. At the parallel market window. We also even saw at the official window, they opened the year at 907 Naira to $1, peaked at about 1,600 and something, 600 Naira to $1, and has moderated down to in the region of 1,300 Naira to $1. So Naira suffered the worst gyration in its history in the first quarter of this year. Of course, the implication of that, we saw an economy that was turning towards a hyperinflation, where prices of goods on the shop floor were being changed on a second basis, and where retail outlets stopped putting price tags on their products. But like I said, I think it was all underpinned by a very unstable and wide fluctuation in exchange rates.
Mr. Chukwu, why did you say hyperinflation? I thought that hyperinflation, the definition could be perhaps inflation over 50%, and we're having inflation at 31.7% as of February. So why did you say hyperinflation? Because I know I've spoken to not you, economist colleagues such as yourself, and I've even debated it here on the program, I think about 2 weeks ago. Are we in a season of hyperinflation? And I was told no.
No, what I said that it was an economy that was tending towards hyperinflation.
Okay.
We didn't get to a point of hyperinflation, but it was concerned that the economy could, if it had continued at the rate it was going, where exchange rate was devaluing at the range of 10% almost on a daily basis, that we likely would have witnessed a situation where inflation rate would have gone beyond 50%. But having said that, I also think our inflation figures need to be recalibrated. I think if it's properly recalibrated, we may have an inflation rate that is more than the current at 1.7%.
Now, what would that recalibration mean? Sorry to butt in, because I'm following up on what you're saying. You are leading me this morning, unlike, what I normally do. So I'll be taking questions, of course, from what you're saying. So what would that recalibration mean before I bite my tongue?
There are two things I think they should look at. One is starting from the basket of the consumer price index. What constitutes the consumer price index? What is the weight of each of these components? So at regular intervals, we need to review the weight of each of the items in the consumer price index portfolio. So because what we look at, what are those dominant consumption of households? At the point where you had a major devaluation in the currency, a major runaway inflation rate, we realized that most households' consumption was more than 67% on food. So at that point, the food basket should now account for that percentage of your consumer price index. But beyond that, you also look at the measurement metrics. Some of us felt that the measurement metrics may not have been adjusted to be in tandem with what has happened in the past 1 year. If you take, for instance, if you look at change in transport cost, you realize that if you take a sample of what it was costing people to move around in the country at some point, and compare that to what it was using the base period of the previous year. The figures we are seeing in the region of 2% change looked unrealistic. I'll give you an instance. At some point earlier in the year, you saw transport costs jump by more than 100% in most locations, not just some locations. So if you bring that impact on the transport segment of the consumer price index, and you are seeing a report that maybe that sub-segment increased by 3%, 4%, you wonder what was the parameter to measure that. So that's why I said that we need to, which is also what happens, what you do at intervals with a statistical database. You need to adjust your statistical database to reflect changes in your economic environment.
Now, Mr. Chukwu, if you're talking of reflection or recalibration, because what my mind is also saying now is that if that recalibration comes, it's going to look like the recalibration that we saw in the unemployment or labor force statistics, where the MBS, yes now, because they will follow international standards, where MBS recalibrated, and we have unemployment right now at 5.1%. In fact, I led a conversation, yes, a conversation I think 2 weeks ago or 3 weeks ago, organized by the Nigerian Bureau of Statistics and CC, Center for the Study of Economies of Africa. We were there for the whole day from about 9 a.m. till like 6 p.m. and we were debating this labor force statistics. And the SG was there. You know, he himself and his officials were there trying to tell us why they did that. In fact, even at that event, he did tell us that Nigeria's GDP will be rebased soon, this year, in fact, and you know, quite a whole lot. So I'm actually a bit worried, though the MBS told us there at that event that, come on, guys, we had to recalibrate because this is international standard. This global standard is not just us. Every other country, even in Africa, have unemployment rates less than in single digit now because of that recalibration. So if you're saying inflation recalibration, I'm afraid it will also look like that, and inflation will now fall to like 10% or so if they recalibrate now at 31%, for example, or even less than that, because unemployment rate was at 33%, now it's at 5%. You understand what I mean?
That's you're the one saying so. I didn't say so.
I'm saying with the facts that we have now. Do I look like
Okay,
SG?
let me be the one to tell you. So what are you saying in effect? Are you saying
I'm saying that the recalibration you are
statistics?
talking about, if it happens, do you see a decrease in terms of nominal numbers? That's what I'm saying in essence, because of the experience, what we have right now. Because now
So
the same
in effect,
data, now the same modality.
in effect, you are saying that we are doubting the current report on unemployment.
Yes, a
Well,
lot of
that's
people were doubting it. I doubted it. That
yeah,
was why I also interviewed the SG at that point. It was difficult for me to understand.
So I think I've spoken to you, we've spoken on this, and I said, look, the current report on unemployment has made that report useless. And that's a fact of the matter. Not the government, not you, not business leaders, not anybody, not even foreign investors, anybody who wants to appraise the level of employment in the country will rely on that report published by Nigerian Bureau of Statistics. So they should discard it. And it impinges on their reputation. And I tell you, basic thing about economics is that we talk of macroeconomic environment. When you, for instance, we are talking of inflation, and when you talk of an inflation figure, I think there are about 13 or 14 categories that the consumer categories that the Nigerian Bureau of Statistics uses to measure inflation in the country. And each of these has a weight. And that weight is unique to the consumption pattern, the household expenditure of Nigerians. So you really can't talk of having statistical data that is not based on the uniqueness of the entity you are measuring. If, for instance, we say that the food index or account for, food consumption account for more than 50% of Nigerian household. So you have to assign a weight of 50% to that food segment. If we say, for instance, housing account for 20% of Nigerian household, you account 20% score to weight to that to housing. You can't come and say you have a statistical matrix that is based on an environment that is completely at variance with your own environment. And therefore, you come up with a result that becomes unusable. So I think at some point the Secretary General of the country has to do the honorable thing, reverse the current method they're using, and use a method that we can use and measure the level of unemployment.
I don't
But
know if
having said that,
okay, please land.
having said that, your key question was, am I not worried that if they do a recalibration of the consumer goods categories, that we may end up with a figure that is no longer representative of the actual inflation rate? I think it's all at his honor, and he has to, like I said, I believe he's a man of honor, he's a professional by every standard, and the concept of professionalism is that if you have done something that's not entirely with reality, you have the um, the um, the courage to say, no, this is wrong and I have to correct it. So looking at the impact that report on unemployment has done to the reputation of the Nigerian Bureau of Statistics, including where the former Statistician General came out boldly, which is very rare, at giving his kind of personality to come out boldly and say this matrix or this parameter you have adopted is not realistic. And I think it's something that nobody wants to. If it turns out to be a mistake, I don't think he wants to repeat that mistake.
I'm not speaking for the SG though, but I don't know if they will do that now because they are also in tandem with what's happening globally, according to what we were told. But I also understand the sentiments, which I also shared. And I expressed that even personally to him on the show while he was on, and personally, even privately while we were at that event 2 weeks ago or thereabout, because the argument was if Nigeria's unemployment rate is currently at 5%, then what is full employment in that case? And, you know, we know the kind of politicians we have. They will say, unemployment no be wahala for Nigeria, should be at 5%. Let's go and sleep. You know, they were even sleeping when it was 33%, let alone 5%. And the argument was also made for, okay, if you want to follow international standards, you can give us that, but give us statistics that will also reflect what's happening in the economy. Anyway, these are some of the thoughts that I just had to bring back from, you know, the workshop that I anchored 2 weeks ago with the SG, NBS, and CC Africa. So that was why I had to ask you that question. But now let's quickly move forward. Okay, let me bring this back a bit because he did tell us about the rebasing of the economy. Is this something you're expecting? The last rebasing was done in 2013, and the SG actually also promised us at that event that Nigeria's economy will soon be rebased, I think even this year. What do you expect? We're at an economy now of about $450 billion.
Well, I think I expect a rebasing to have taken place. The economy cannot remain static over a period of a decade, 10 years. There's always a defined timeline for rebasing of economy because of the shifts in the economic structure. So it's possible there are some sectors of the economy that become relevant or relatively big that we're not capturing yet. And there are some they may have reduced that we need to adjust. Take, for instance, Nancy, the telecommunication sector, when we rebase the economy, and not sure the telecommunication sector accounted for more than 3-4% of the GDP. At the last GDP report, it accounted for 16.6% of the GDP. It became the second largest contributor to the GDP after agriculture, which accounted about 26% of the GDP. So if the rebasing didn't take place, it simply means we won't be capturing the full the weight of that sector that had become the second largest sector of the economy. And look at entertainment industry. It's under, it may have to be separated and measured separately to know. I think I saw an article that said they employ more than 4 million people. So to see if it can be counted instead of under the subgroup weight it is currently reflected. So we have to look at these sectors of the economy that has come up recently and are blossoming or growing that we may have omitted. So it's something that we should do every decade, every 10 years.
Okay, let's take a look at Q2 now. We're already in it about 3 days into Q2. What are your predictions for this Q2, perhaps for inflation? I don't want to say unemployment because we've talked about that. If they do release for the quarter, whether it will still be in single digits. So what are your expectations for Q2, inflation, and even the capital market. And I'll come to the recapitalization of the banks in a bit.
Okay, I think what we may see is that inflation will remain high, continue to record higher levels for the second quarter of this year. Simple reason is this: when you measure inflation, you measure it year on year. So we'll be talking of March inflation with March prices as at last year and March prices of products, goods and services in March this year. The same thing with April and May. Remember the spike we saw in price levels happened after May swelling in. So I think the period we should expect moderation, inflation to begin to moderate is from the third quarter of this year, when you begin to compare figures for price levels in July, August, September, with price level in June, July, and July, August, September last year. So, and again, also bear in mind that the lag effect of the appreciation in Naira will not materialize until about 60 to 90 days. And this is basically what happens. For those who are importing goods, it's when goods imported at a new exchange rate begin to arrive, the shop floors, that those who are holding stock will adjust their price downwards to take their losses. Until then, we begin to see goods imported at new exchange rates coming, which at least will take at least 6 weeks for you to arrive our shares and clear into the warehouses. That you begin to see the impact of lower exchange rates. But beyond that, it's not just the exchange rate that is a pressure point for inflation. You have to deal with the issue of food prices. It's expected that even food prices will go further up or further northwards in the next few months as we go towards the lean period of the year. Remember, the lean period in Nigeria is after the planting season, June, July, August, before the harvest season sets in. So with what we have had to deal with in terms of insecurity, we should expect further increase in food prices in the next 3 months, that is second quarter of this year. So food inflation will still be obstinate. Hopefully, by the time you get to the third quarter of the year, when the harvest season would have set in, we may see some level of moderation in food prices. Of course, you're not going to expect material moderation because you still have to deal with the issue of insecurity in major food based on the economy. So in terms of inflation, I expect inflation to remain obstinate, remain high in the second quarter of this year.
How about the capital market? Yes, we've seen an excited capital market since the beginning of this year. How long will that excitement last, or will that excitement also still go on? Because now, for the banks' recapitalization plans released according to the Central Bank of Nigeria, the big guys, 500 billion naira. And when I try to convert that into dollars, I think 500 billion naira would be about 390 something million dollars, talking about dollar equivalent now. So excitement for the capital market. Of course, you own an investment firm there, so you and your colleagues could be excited. The bank could be coming to you to raise funds. Now, time to make money for now.
Okay, we'll come back to the issue of bank capitalization. Let's deal with
capital market.
I'll come back to the issue of bank capitalization, probably when you ask specific questions on that. But when it comes to what will happen in the capital market, we should expect some price adjustment, market adjustments. We should expect market corrections in the second quarter of this year. And this is basically what would drive that. One, we've seen a lot of liquidity would leave the system, and we are not seeing fresh liquidity go into the market. We have seen interest rate effective yield on 364-day instruments in the region of 23% effectively, because if you look at the stop rate of 21.12%, that the last two auctions of 364-day instruments closed, we are talking about effective yield about 23% for 364-day instruments. So investors are going to compare the possible further capital gain. We've already seen more than 39%, 39.8% in the first quarter of this year. Well, investors are going to compare possible further capital appreciation, whether you expect further capital appreciation of up to 21 to 23% in the remaining part of the year on equities. If you don't expect that, that means you wouldn't take further position on equities. Second factor is that investors may be disappointed with the kind of returns that Quoted Company is going to announce as we enter the benefit season. If you consider the fact we are from the month of April, company will begin to announce their end of year performance and benefits due to shareholders. So if those benefits are not representative of the current yield environment in the fixed income space, investors are going to sell down on equities and switch to fixed income instruments. So I expect price corrections in the second quarter of this year. Other variables we mentioned in the economy. I talked about exchange rates. I think we should expect, okay, I've not spoken on exchange, we should expect if the current policy position of the central bank is maintained, we should expect Naira to remain relatively flat at current levels. I don't expect further material appreciation of more than 10-15% beyond where it is today. We're talking about 1,278 Naira or thereabouts at both the parallel market and exchange rate and official window. So I think the best we should expect is something in the region of 1,000 Naira, but I doubt if we will even touch 1,000 Naira. But in effect, I expect exchange rate appreciation to flatten in the second quarter of the year. GDP performance, it will be driven by what happens in the agricultural sector. Agricultural sector is still suffering. We saw a material improvement in the oil and gas sector in the last quarter GDP, that is the fourth quarter GDP. I doubt if we should expect that much in the second quarter, in the first quarter GDP. If you remember, there was a dispute between the federal government and OPEC on Nigeria's crude production. I tend to align with OPEC figure, and I tell you this. Prior to the OPEC announcement that Nigeria's crude production had declined in the month of February, I had told people that if you look at the fact that the discos were complaining that they were not getting enough power supply because the Gencos were not getting enough gas. Now, if the Gencos were not getting enough gas, that is the generation company are not getting enough gas, simply means crude production had declined because most of the gas going to the power plants were coming from crude production from associated gas generated from crude production. So if crude production declines, gas production will also decline. Gas fed into the power plants will decline. It will reflect in shortage of power generation and power distribution in the country. So I expected that we should expect lower average crude production. If that happens, then the GDP growth in the first quarter of this year will be lower than the 3.46% we recorded in the last quarter of last year, that is the fourth quarter of last year. I think I'll touch on many of the variables. We talked about inflation, we talked on exchange rate, we talked about the GDP growth rate, of course, and unemployment.
Because at least those are the basic parameters, looking at macroeconomics. Mr. Chukwu, you're dragging me to a lot of places, and I have a lot of questions to ask, but I'm trying to curtail myself to ask a few questions. Because when you talk about crude price, what came to my mind also is gas price hike that is imminent, that may now also, increase energy cost, and fears are actually gripping many of us, Nigerians, and even businesses, manufacturers alike. What do you think really of that space and your outlook for second quarter? Because now gas prices increase, energy costs, they say they are taking off, is it a subsidy or tariffs? Tariff, whatever. That sector is so complicated.
Yeah, Nancy, the interesting thing in Nigeria is that the people who are in the risk sector, productive sector, this sector of the economy are going through multiple challenges. The increase in gas price will further worsen their energy cost. And at a time when consumer spending is weak, consumer purchasing power is weak, disposable income is weak, the demand has collapsed. At the same time, they are also dealing with higher interest rate. Most banks are lending to the real sector in the region of more than 25 to 35% interest rate today. And the axis of conversion cycle is quite longer than trading activities. So if you have increase in input costs, starting from increase in energy costs, and then you have to deal with increase in cost of funds or funding costs and lower demand, then you can imagine what the outlook would be for the real sector of the economy. And that's the sector that creates most of the employment, other than the agricultural sector. So what will be the impact of the increase in gas prices beyond the increase in tariff, which will affect you and I, every household? Particularly, they say the urban households will pay something in the region of 200 naira per megawatt hour. I think the current tariff is in the region of 120 naira per megawatt hour, between 80 and 120 naira per megawatt hour. So if we are going to 200 naira, you're almost talking of more than almost 100% increase in tariff. So that will further dig holes in our disposable income or our consumption. So we all have to continue to tighten our belt. But unfortunately, even with that, it doesn't guarantee you are going to see improved power supply. Because if you see improved power supply, and then you average out your cost of energy generation, both personal energy generation from your diesel and I pass my neighbor generator, fuel generator, you would have said, okay, yes, at the end of the day, I will be better, but it doesn't guarantee that you're going to have improved power supply. So it's just going to increase your cost without increasing quality and quality of service or time of power supply.
Okay, let's go back to the banks. You were a former bank managing director. What kind of thinking is going on right now in chief executives, their minds, the big banks, the mid, as well as I don't want to call them the bottom tier, but you know what I'm talking about. What are the kind of things that will be going on now? From now till 2026, the CBN has given them that timeline. These are banks. In fact, when I saw that, I posted it on Twitter that night. Is it on X? You know, that night. And a lot was just going on in my mind. These banks have been releasing lofty profits over the years. What does this recapitalization mean for banks, really, and even for the larger economy?
Okay, I will take it from a larger perspective. I had said at a forum that the banks need additional operating. Some of the banks, not all the banks, some of the banks need additional operating capital because of shift in exchange rates. Transaction tickets have increased materially, and I gave the example that previously, prior to the deregulation of the price of fuel or PMS, a 15 KT, 15,000 metric ton of fuel import was costing in the region of 4 billion naira. Today, it's in the region of 10 to 12 billion naira. So a bank that was funding is 10 transactions needed 40 billion. Now they need more than 120 billion to fund 10 customers, just doing 15,000 metric tons. That the demand, because of shift in price levels, the demand for loanable funds will increase, and some of the banks will need to increase their operating capital. That's a different thing from regulatory capital. The regulatory capital is as imposed by the regulator. And then automatically, if the banks are increasing their operating capital, then many of them would invariably have increased their capital to meet any regulatory new threshold. But the key thing that was challenging with the pronouncement by the central bank is the exclusion of retained earnings. And Nancy, I can tell you one thing for free. Retained earnings are income due to shareholders that the shareholder decided to plow back in the business so as to grow the business. The shareholders could have, at the point of declaration of the profit, decided to pay 100% of profit as dividend. But if the shareholders decide that we think there's a prospect in this kind of business, and we are just going to have what we call conservative dividend policy, so you pay marginally because you want to grow your business. You cannot exclude the amount a businessman plug back in his business from counting as capital of that business. What they have done is to say that, look, they have completely ignored or rubbish the concept of time value of money. Time value of money simply says that the 1 naira yesterday is not the same thing as 1 naira today. What they are saying is that for shareholders who own shares in banks, the 1 naira they invested in the bank 20 years ago is the same 1 naira today. So that 1 naira would have either earned them income if the company is doing well, or diminished in value if the company is doing badly. So you have a negative reserve. But if the company is doing well, it would have been accruing earnings or retaining part of what is generated from that 1 naira. If you ask the banks to exclude its retained earnings, it then means that if I have 100 million, I invested 100 million in the bank, in 2004, and today somebody brings in 100 million and invests in the bank, the person has a quart shareholding with me. That's what it then means, that person has a quart shareholding. Forgetting that in 2004, when the capitalization took place, exchange rate was in the region of 128 naira to $1. Today, even at the best rate, you are talking of 1,200 naira to $1. So the value that people put in the investment, which is also why some of the banks have retained earnings shareholder from the region of 1.2 trillion naira, because over time they've accumulated or reinvested whatever at the end, with the expectation that on a rainy day they have the buffer. That's also why the central bank also talk about statutory reserve. So when you make profit, the central bank says you can't share everything. You have to keep part of it as part of additional buffer. And that is what they call statutory reserve. And then you have your revenue reserve, which you can share. So to say that the retained earnings do not count, it's either a judgment error or something else that I don't understand.
Okay. That's an interesting angle to bring in, and I'll interrogate that further subsequently. Do you see mergers and acquisitions very quickly?
If the central
Or
bank
which
stick to
banks
it,
will actually survive this? Because
if
there's
the
also been, sorry to cut you short, Mr. Chukwu, there's also been a few banks that have come out in the last 3, 4, 5 years. For example, is it Titan Trust Bank, for example, acquiring Union Bank? You know, things that we've seen some, activities in the last few years. So which banks do you see will survive? Which banks do you see would merge or acquire?
Okay, it will be difficult for me to speculate on which banks will survive and which one will
We've been seeing
merge.
their financial statements now, Mr. Chukwu.
Let me tell you that Nancy, I was there in the industry when the
Yes.
consolidation 2004. One of the biggest banks to the Access Bank had a shareholders fund of 2.8 billion. At that point, the banks were required to raise their capital to 25 billion.
5 billion.
So today, that same Access Bank had about 2.8 billion, either 2.8 billion or 3.2 billion, because they were one of the banks we discussed with to merge with. Then is one of the biggest banks. So it depends on the vision and the capacity of the directors and shareholders of the company, of the bank, to determine who will survive and who will not survive. Some of them could invite core investors to so that they can remain standalone entities. But clearly there will be some, the central bank sticks to this, which, like I said, is completely wrong. They stick to it, then you're likely going to see measures. But let me also tell you one of the things they are ignoring. If you see the kind of measures that leads to an oligopolistic market environment for the banking industry, you're going to stifle competition, you're going to stifle innovation. So the bank will become, you have a few dominant banks that have no reason to innovate, have no reason to provide the best service to consumers.
Would you see that happening, especially with the rise of fintechs? Sorry, I'm just thinking aloud. Because even the banks now, not so, we are seeing some of the activities being taken by, fintechs, as it were, fintech financial technology, most of these apps. So people don't even need to go to the banks anymore. I hope you understand what I'm saying. So
yes, I do. We are seeing this intermediation from financial technology enterprises.
Yeah.
But remember, size still matters. When you have a lumbering giant who is ready to acquire some of these, even the tech companies, you may see an oligopoly market, which is why the antitrust law is there in America. When the likes of Microsoft want to buy up some or integrate some new technologies, the Federal Competition Agency in America always stop them from doing that. So it's beyond really the fact that a dominant market player who is the only one in the market can buy up anybody that comes into the market and kill it. Some people that are from competition can actually buy a competitive technology just to destroy it, to make sure it doesn't.
Final question before we go. In all of this that we have said, in all this grammar that we've been speaking in the last 40 minutes or thereabout, Q2 for an average Nigerian, for me and you, what should we expect? Earlier on, I heard you clearly. You said that we need to also tighten the belts. How far or how tight should it be?
Well, on a lighter note, unfortunately, it doesn't look like you need to tighten your belt because you are growing
Mr. Chukwu, The same thing with you. Because I'm doing what? Forget all these things you are seeing. Oh.
So,
Sometimes we don't look like it. Or sometimes because we have also information and knowledge, we prepare against the storm. You know.
okay, so please tell us. So, okay, but I think most Nigerians should expect still a relatively difficult quarter. Price levels, I said, are not likely to come down. We're talking of high increase in energy costs. I said that the appreciation we see in Naira is likely going to flatten. We're likely going to see high level of unemployment because input costs are increasing for the manufacturing sector.
Okay.
We are not likely going to see improvement in crude production, in the material improvement in the crude production in the second quarter of this year.
Okay.
So on average, I think households should tighten keep their best tight. I'm not saying tighten further. Keep their best tight and hoping that by the time we get to the third and last quarter of this year, they will see some breather.
Okay. I want to say thank you very much, Mr. Chukwu. It's been a while since I've spoken to you, isn't it? It's been really a while. Did you miss me at all? You know?
Yes, so, and that's I'm wondering whether it's because we're not speaking that you're growing more robust.
Okay, we'll do this again sometime because I always enjoy speaking with you, and you know that because so much gotten from this interview. So we'll schedule another time very soon. Thank you very much for coming, and have a lovely day.
Thank you for having me.
All right, I've been speaking with Johnson Chukwu, who is the Group Managing Director at Cowrie Asset Limited. Yeah, because that's one company that's into a lot of things. Thank you all for joining us. I will see you all again tomorrow, God willing. Be the best you can be and be the change that you want to see. I am Nancy Naji, signing out.